Now, if you're looking for some juicy high yield, I have an option here that you may find really interesting. Now, this is one that pinged on my phone where my order has gone through to start a position here today at the end of 2023. Now, this is Barings Participation Fund. It is a closed-end fund. Now, I'm here on the CEF Connect website. This is a fantastic resource that enables retail investors to get a lot of detailed information that's not available in other websites about investing and stock investing. But it helps us to dig into CEFs and understand a bit more about what we're investing in. Now, one of the really important points here is this chart here, and it shows that NAV to price. Now, as we can see here, the NAV in light blue is relatively consistent over this time period from 1998, whereas the price will often be much higher or much lower than the NAV. So the NAV is the net asset value. This is an objective measure of the value of the assets in the underlying fund, whereas the price is what it's trading for on the market and what current investors are willing to pay for this bundle of assets. Now, with a closed-end fund, the price can get quite disconnected from the NAV, and that can provide us with opportunities to buy when the price is below the NAV, and that enables us to not just gain from the distributions at a higher rate, but it also enables us to ride up a trend here as the prices increase to rise above the NAV again. Now, that is one of the key things with closed-end funds. You have to buy them opportunistically. It's best to buy them at a discount here. So as we can see, Barings MPV currently has a discount of about 4%. This is not very big. Over the last year, it's had a discount of about 12% on average. So yeah, it's not too bad. Now, the current distribution rate here is quite nice. It's about 9.51%. So that does look very nice to me. Now, when we learn a little bit about the fund basics here, so this doesn't really tell us too much on the screen. It's about current yield and some opportunity for capital gains. Now, this is probably the key thing here. This is what I like about Barings. This is, in my mind, the quintessential key use of an actual closed-end fund. They are trading and buying and investing in very illiquid assets. And so this is where a CEF structure makes a lot of sense to me. Now, key things down here. Leverage is really important on a closed-end fund. Some of the closed-end funds could have leverage up to 30%. Now, if you had a portfolio consisting only of this type of investments and they all had a 30% leverage, that means you might actually have a lot more leverage than what you expect. Now, by itself, not so bad. These are professional managers. They are getting this leverage at a really good cost. The big problem for you as a stockholder will be the situation here, scrolling back, where, for example, if the prices are disconnected from the NAV and there is an issue, that leverage means that your prices could fall very hard. So we look here historically, the global financial crisis, it looks like prices are about $17 and they fell down to $7.50, I think, over the course of a year or two. So that's a substantial change in the price of your holdings, and that's going to be exacerbated when you're investing in closed-end funds that hold high levels of leverage. So here, leverage at about 12%, I think this is quite acceptable and quite reasonable for me, and so I'm quite happy to see that. Expense ratios. So many closed-end funds have expense ratios and management fees of about 1%, so this is not by itself unusual. It does have a relatively high interest expense, so if you think about the current cost of borrowing money, not unsurprising, and that gives us a total fee or expense ratio here of 1.46%, which, yes, it is on the high end, but a big portion of that is these interest expenses here because of the leverage that the fund is taking on. Now, what else can we learn on this website? Distributions. We can see here recent distributions, and we can see here the distribution amounts. Relatively stable here as well, and we'll see that this is all coming from income here. We can also, for example, extend this back in time a little bit, and we can see again as we scroll down through this table that it looks like all of the distribution has been coming from the income, not long-term, short-term, or return on capitals. Information regarding distributions. Annualized distribution rate on the NAV is 9%, so nice and healthy, and that is one of the key things that I like to see. pricing information. So this is where we can see, for example, over the last year, it's trading at a discount now of about 4% as we saw, but it has been much, much better. And I should have bought it here in May, where it was trading almost at a 25% discount to the NAV. Now that would have boosted the distribution rates that I would be getting, and it would also have enabled a very nice capital gain here as well. Now, it also has this performance chart here, which in my mind, I think I'd prefer this as a table, but it is what it is. One of the things that I do like about this fund and Barings is it does have a very nice long-term return on NAV. So if we go back to the overview, for example, we can see this has been trading since 1998. And so we can see it's got a very nice 8 to 10 to 12%, fluctuates on that range, return on NAV, I think, per year. Now, if we look down through here, the portfolio characteristics, now, interestingly here, a lot of the investments are not rated. And this is where I think the CEF structure really shines, is they can take these longer term investments in very illiquid assets that are not going to be rated. As I've said in other videos, it's in these unrated, unexamined, under-analyzed, under-followed corners of the market that we find opportunities. And this is where MPV is really focused on. And we can see that from this credit quality chart here. This is where they're focused on. This is where they are finding opportunity. And that, my friends, is why it is such an interesting opportunity today. Let me know what you think. Is this the type of investment that you are interested in, with a nice distribution rate of nearly 10%, strong long-term gains here over the last 25 years, and a high level of stability? If not, why not? Is this in your portfolio? Is this something you're interested in investing in? Do let me know in the comments down below, and hit that like button and hit that subscribe button and help me out with the YouTube algorithm. Thank you very much, and I'll chat with you soon.